You want to know how risk is handled in space. What are the qualifications for risk? You've already touched on that. And he's wondering, does it follow in any way the shipping example?
Yeah. So this is actually one of my favorite stories in and around sort of how the shipping industry got started and how, the story of how Lloyd's as an institution got started. Yeah, which is, by the way, still the world's foremost market for any type of weird risk, including space. So we work with a bunch of Lloyd's markets. But how Lloyd got started, it was essentially a coffee house where merchants and sailors would gather and they trade stories, and they eventually became effectively an intelligence hub for figuring out what was actually happening in the high seas. And then from there, actually, the concept of insurance started with mutual funds, and how mutual funds got started were effectively death pools. These sailors and merchants would bet against each other. Jim's a moron; he's going to run his ship aground, or Sam's a great navigator; he'll be able to get back no problem. He'll probably shave some time off. So that's actually how insurance got started: betting pools that then transformed into mutual funds, which then evolved into modern sort of insurance infrastructure we saw today. But yeah, I like shipping as an example because I think there's a lot of corollaries between, there's a lot of parallels between where we are today with space and where shipping was in the late 17th century, right? It's exciting, it's new. We're on the cusp of this massive explosion of sort of commercialization and commercial potential, but we just don't know how to price the risk. And so because of that, the means for additional forms of capital to flow into the market are limited. You can't get a loan on a thing that you're launching in space, because if it breaks, what are you going to recover, right? But with an insurance policy, you have that first layer of risk transfer, that basic security that then allows a bank or a credit lender or somebody with a little bit of extra cash but doesn't want to invest in an equity round, that person can now feel safe enough to participate, which is important because as much money is being pumped into VC and as much money is being allocated to government R&D funding, there is a whole universe of financial instruments out there that aren't even looking at space as a potential destination. Because
give us scope on that, because it's a big number.
It is a big number. So the private credit market, and by its very nature, the private credit market is difficult to quantify because it is private, right? But the estimates are upwards of $1.8 trillion as of last year. And private credit really exploded in popularity after the global financial crisis as a new destination for private capital to be invested into and to seek better than ordinary returns. And so there's a lot of money out there for private credit, which for those who aren't familiar, it's essentially lending to businesses that would not traditionally qualify for a bank loan, right? It's kind of like the private equity of lending. And so, there's that, but there's also actual private equity that does not want to participate in space because it's still viewed as too frontier of a sector. And then there's everything else, right? Asset-backed lending, insurance-linked securities, all forms of derivatives and additional sort of secondary and tertiary instruments. Like there's a whole universe of additional capital out there.